Hello everyone, welcome back to my channel. Benjamin Graham propagated the idea of value investing, which was later popularized by Warren Buffett. Value investing, in simple terms, means buying stocks of companies that are trading below their fundamental value and holding them until their valuation reaches to a point where it is more in line with their true worth. Now, what if I tell you there is a category of companies that is always available at a discount? You can try guessing it before I reveal the answer. Well, the answer is holding companies. Now, before you watch this video further, it is important that you understand the holding subsidiary structure and its purpose. So, if you don't already have an idea about it, don't worry, I've got you covered. I've uploaded a video explaining it, and the link to the video is in the description box. So, getting straight to our topic, what exactly is holding company discount? I'll explain it with an example. Let's say X Limited is a listed company which owns two listed subsidiaries. The first one in the real estate business and the second one in the IT business. Now, ideally in India, a promoter is not allowed to hold more than 75% stake in a listed company. However, for the sake of simplicity, we are assuming that X Limited holds a 100% stake in both its subsidiaries. Now, X Limited has no business of its own, and the only asset on its balance sheet is the shares of its two subsidiaries. Let's say the market cap of both these subsidiaries is 100 crores each. So the total value of X Limited's shareholding is rupees 200 crores. Now remember, I told you that X Limited has no other assets apart from the shares in its subsidiaries. Let's assume that it has no liabilities as well. What do you think the market cap of X Limited should be based on this information? You can try guessing the answer and mention it in the comment section along with your rationale behind it. Well, at face value, it feels like X Limited's market cap should be 200 crores because it has shares of 200 crores and no liabilities, right? Well, the answer is no. In real life, the market cap of X Limited would be lower than 200 crores. It could be trading at a 20% discount, that is, at a market cap of 160 crores, or depending on the market situation, it could also be available at a 50% discount, that is, at 100 crores. Now, you might be wondering, how is this possible? If something is available at a discount, why isn't everyone rushing to buy it? Actually, there are many reasons why companies like X Limited trade at a discount. The first one is investors are forced to take exposures that they do not intend to. Let's say there is a person who is interested in the real estate business of X Limited because he or she feels that it is a growing market. Now, this person is not really interested in the IT business because he feels that this industry has rough times ahead. So, if he buys the shares of X Limited, he will obviously get exposure to the real estate business which he is interested in. However, alongside that, he will be forced to take an exposure to the IT business which he doesn't find attractive. Now, in this particular case, X Limited only has two subsidiaries, but in real life, holding companies can have 5, 10, or even 100 subsidiaries. Now, you might just be interested in one of its subsidiaries. However, if you want to invest in it, you will be forced to take an exposure to every subsidiary that the holding company owns. Now, coming to the second point, why holding companies trade at a discount. It is because they are never going to truly realize their full value. This is because holding companies like X Limited are formed for the purpose of controlling all the different businesses that a business house runs. It is likely that the business house is going to hold these companies through X Limited forever. Why would any rational person want to liquidate a business that is doing well? So, even though X Limited has two subsidiaries with a total value of 200 crores, it is never actually going to sell these businesses and give out the money as dividends to the shareholders. Now, hypothetically, let's say X Limited decides, let's be offbeat. We are going to sell off these businesses and give out a bumper dividend to our shareholders and prove Harsh wrong. Now, that is where the third issue arises, and that is taxes. As soon as X Limited gets 200 crores for the sale of its subsidiaries, it will have to pay 10% of it in the form of long term capital gains. Hence, it is going to realize only 180 crores. Now, X Limited will announce and distribute this 180 crores amount to its shareholders in the form of dividends. The shareholders in turn will have to pay taxes on these dividends, which could range from 5% to 30%. Let's say the average rate that the shareholders have to pay is 20%. So the final value that the shareholders of X Limited are going to realize is 144 crores after long-term capital gains on the sale proceeds and taxes on dividends. So 28% of 200 crores is actually lost in the form of taxes. Now, there could be various reasons for holding company discounts, but I have highlighted the three most prominent issues why investors value holding companies at a discount. As a learning exercise, you can Google famous holding companies and try to find out the market value of the shares that they hold and compare it to their market cap. The difference between the two will be the holding company discount. So this sums up our discussion for today. Considering this is a really difficult topic to understand in one go, I'm expecting a lot of doubts. Feel free to mention them in the comment section. If you want me to talk more about how to make returns through holding company investments, or you want me to share my personal experiences with holding companies, do let me know. If you have any video suggestions or you want to discuss anything with me, then you can connect with me on social media. I've put the links in the description box. If you liked this video, please give it a thumbs up and subscribe to my channel for my upcoming videos. Do share it with your friends and family who might be interested in finance. Stay tuned. Thank you.